Hey, crypto family. So I got a couple news articles for you, and then we're going to go over some Bitcoin and altcoin analysis. So the first article is by CryptoCoin News, and it says India's biggest conglomerates explore blockchain for B2B payments. It says, despite a plethora of sometimes unclear regulations and restrictions, large businesses and banks in India are still embracing cryptocurrency, or at least some of the technology that underpins it, as a more reliable way to reconcile accounts, make payments, keep proper records, and manage internal funds. So as you know, India has been real strict against cryptocurrency, specifically the Reserve Bank of India. And right now it's actually talking about some of their top firms looking at the blockchain technology specifically. So not actual cryptocurrencies, but the underlying technology behind it. So as you know, blockchain technology is great for security and it's great for transactions and just basically just being a secure form of keeping different digital assets and just everything under one place and a lot more secure. So it says using blockchain technology for record keeping practically removes the possibility of discrepancies, and it is the security functionality that makes it especially useful for large corporations with multi-level data flow. So again, they're still in testing stages, but Unilever, which is one of the biggest firms in India, is actually talking about using that blockchain technology. And right now, it says significant restrictions by the Reserve Bank of India may yet to prove to be a challenge for such nascent implementations, but many experts are of the opinion that these restrictions can be circumvented if corporations keep transactions strictly in-house. So again, I think that by implementing blockchain technology, they're just highlighting some of the advantages, as well as it may have some underlying effects with, bringing cryptocurrencies over to adoption. But right now, basically says they're not adopting cryptocurrencies just because of the, so much manipulation going on, especially in India. So they're trying to basically level that out before they start regulation with actual cryptocurrencies. And then it says, despite this, according to the report, corporate stakeholders remain convinced that getting regulators on their side in the economy, projected to surpass the US by 2030, is only a matter of time. So again, only time will tell, but it's good to see at least they're looking at blockchain technology, hopefully to go into the talks about crypto afterwards. Now, the next article is by Cointelegraph, and it says, Dire Report 2018 sees record transacting volumes on crypto exchanges. So as you know, 2018 wasn't the best year for cryptocurrencies, but there were a lot of transacting volumes going on, whether it was people selling, basically just a lot of crazy volatility that we saw in 2018. And, more than 2017, I would say, because 2017 was more towards the end of the year, whereas 2018, it was just everything was going up and down constantly. And you had new algorithms going on with trading and just so many of those BART algorithms where, coin would drop over 10%, then, a couple of days later, it would rise 10% or more. So a lot of that was going on. So just a lot of volatility and a lot of transacting volumes. And it says, also, it talks about the Bitcoin miner revenue. And it says, according to the research, BTC miner revenues reportedly surpassed $5.8 billion in 2018. In January alone, miners earned $1.2 billion. However, the monthly figure has slumped by 83% over the year, resulting in a combined revenue of $210 million in December. So I want to talk about the mining as well because, a lot of mining companies actually didn't even profit towards the end of 2018. There were only a very few. And as you know, with what's going on with Bitmain, they've slashed over 50% of their workforce, and they're really not doing too good. They're restructuring. The top CEOs or the co-founders stepped down, and now it's, a new person running the show. So they're trying to restructure how they can stay a long-term company versus just mining. So that's what they're going with right now. But one thing positive of that, it says at the beginning of 2018, a number of mining pools led by application-specific integrated circuit ASIC manufacturer Bitmain, together with the VIA BTC pool, which the company has invested in, held control of over 53 of Bitcoin's network hash power, which is insane. These same pools started 2019 with only 39% of the network's hash rate. And this is amazing because you don't have that huge monopoly controlling the network, which also helps with those attacks and just security in general. When you have multiple people controlling little parts of the network versus a huge monopoly, that helps a lot with the manipulation and just the hacks that can go on because they have so much hash power. So it says, as Cointelegraph reported in December, Dire found that institutional investors have shifted towards higher liquidity over-the-counter physical Bitcoin markets. And it also says, unknown miners closed December having solved a whopping 22% of the total blocks, up from 6% at the start of last year. The Bitcoin network is currently less likely to experience an attack given the fact that BTC.com controlled pools have lost dominance over the network. So again, some good positives with Bitmain losing ground right now. It gives exposure to other people. Other people can actually get some of the pie. And right now it does minimize the percentage that an attack will happen. And last but not least, the article, it says crypto asset manager LedgerX launches Bitcoin Volatility Index. So this was a cool article that I thought would be good for y'all to know. And as you know, LedgerX, really popular company, they've actually launched its first Bitcoin price volatility index. So similar to the VIX and the stock market, how that measures volatility and just basically, how volatile and how much the markets are moving. And usually, periods of high volatility you can notice, and then you can kind of gauge it to when there's going to be, huge spikes in volatility. And it's great to see LedgerX is launching their own Bitcoin price volatility index, which it's only tradable to a few people right now, but they are going to make it tradable to a lot more people in the future, it says. And it says the LXVX incorporates the level of fear and uncertainty in the Bitcoin market and thus can be thought of as the Bitcoin Fear Index in the same way the VIX is commonly referred to as a stock market index, fear index by market commentators. So it's going to introduce a whole nother level of awareness in Bitcoin trading and cryptocurrencies, because now that we have a volatility index, again, it just adds one more layer to it and kind of one more tool to help you prepare for trading and managing your risk. So I think this is great. And again, you're going to see a lot of people talking about this. Now, looking at the markets today, so we see right now, Bitcoin is up 3.69%, which is great to see. And it's at $3,709. And then you have XRP up 3% to 33.4 cents. Ethereum's up 8.93% to $129. Bitcoin Cash is up 5% to $132. And then EOS is up 7% to $2.47. Now, you can see Tron is up 9.53%, which is great to see because it was falling a lot the past couple of days, but then it had that rise, so it is leading the market again. And one of the reasons is because of the upcoming BitTorrent airdrop, which I know Binance Launchpad supports and another exchange supports, but it has been gaining a lot of exposure recently, so I wouldn't be surprised if this coin keeps going. Now, looking at the Bitcoin analysis here on the 4-hour chart, so we can see right now that I mentioned that this RSI was extremely low, and I compared it with other levels of RSIs towards the beginning of December last year, and how that pretty much precluded a rise in Bitcoin's price. And right now we can see literally, the next day Bitcoin shot up, and right now it's hovering around that 3660 level. Now, I mentioned the 200-day moving average could provide some short-term resistance, which it is right now at this 3720 level. But if we do pass that, then again, we're looking at this 3800, which also coincides with this 50-day and 128-day moving average. This will be a strong resistance. If we can break above this and hold it, candle close over it, then I do see that as very positive. But again, right now the RSI is barely overbought. I mean, it's at 51, so almost in the middle. But again, always keep in mind that we can have a pullback at any time, and always set your stops and take profits accordingly. Now, going on to look at Tron. So right now I drew this resistance levels. The next resistance is at 2.6 cents. So you can see here it was resistance twice a couple days ago, and then now it's providing resistance again. So we need to get past this 2.6 cents. If we do, looking at that almighty 3 cent level, which did provide huge resistance when we had a rally up there. Now, looking at support, I'm looking at the support level of 2 cents for it to bounce off of if it does come back here. So again, if you're thinking of entering, maybe look around this level. But right now we're seeing the 50-day above the 128 and 200-day, which solidifies a positive trend. So hopefully we can break above this 2.6 cents resistance and close above it to maintain that trend. And then looking at the RSI, it is about 56, so a tad overbought. Again, always be prepared to take profits and set your stops. So with that, if you enjoyed this video, please give it a like, comment, and if you haven't subscribed, please do so and share the video. I'd really appreciate it. Till next time, thanks for watching.